Bitcoin Weekly Outlook. Is the trend about to crack or confirm? Good question. Hey guys, it's Keith Allen. Hope you had a great weekend. Hope you spent a little time doing something you love and maybe backed away from screens a little bit. Friday, we obviously we had actually a pretty nice rally last week. Friday, that rejection came in hard, right at 98K, right at where the new Timescape indicator suggested that it would, and now we're seeing a retest of support. Okay, so as all good trends need, quite frankly, I think this retest of support is absolutely necessary. So whether we hang on to this yearly open or potentially go lower, all remains to be seen as things develop. So in this analysis, we're going to take a look at where the local support is, kind of where the macro is relative to that, and where things might go, because we of course have Wednesday's FOMC Fed rate decision meeting. Of course, nobody expecting a rate cut at this point, but we always, of course, are listening to Fed Chair Powell, hanging on his words to see if we can get any insight whatsoever. Live chat is open as per usual, and if you are new to the stream, welcome. Glad to have you with me. Hey, Craig, nice to have you back here, man. If you haven't done so yet, do me and you a favor. Do us all a favor. Smash some buttons. Hit the like. Hit the subscribe. If you are able to join me live and you want to participate, by all means, please do. Love the engagement. I will always do my best to answer your questions. And if you have insights you want to share, we want to hear that too. If you are watching the recorded version or aren't able to engage live, go ahead and leave a comment, and I will engage with those later for sure. 100%. I always do. But seriously, it really helps out, helps me grow the channel. And that's kind of a nice way of paying me back, a free way of paying me back, if you will, for the work I'm putting into this for you guys, and hope you're gaining something from it. I'm actually getting some pretty good feedback from you guys, and I really, really appreciate that and enjoy it as well. So keep it all coming. Let's go ahead and climb into the charts and take a look at what we have seen through the past week and where I think things are headed as this week develops. Again, FOMC meeting on Wednesday, Fed Chair Powell's speech coming after that, and then, well, we'll see. We'll see, right? So let's start on the candle chart. Okay, I actually have, I got a pretty good one here for you. I have the I got everything lined up here on this chart. So let's show you this one for starters, and we'll go from there. There it is. Always dropping the like. Appreciate it. Oh, appreciate it, Krieg. Appreciate it for sure. So a lot going on this chart right here. Okay, these horizontal lines. This is the new Timescape indicator from Material Indicators. We haven't even released this one yet. We've been testing it for a while, and it's been performing, as you can tell, pretty well. We also have Trend Precognition signals up top and down on the bottom here. The arrows are the A2 plus algo, and the dots are the A1 Algo. So let's look at what happened first here. I want to simplify this because there's a lot going on in this chart. So as you can see, these horizontal lines, these are time-based references. In other words, this horizontal line that is serving as support right now was the 2025 open, and we're seeing that these yearly and quarterly opens, especially, and the week after the yearly open and the week after the quarterly opens, those all have some significance, and they seem to perform fairly well. Now, do we see wicks through them from time to time? Absolutely we do. That's not uncommon in this game at all. Through this testing period, I have actually been overlaying this with my technical analysis, and it's giving me some additional confidence and conviction in what I'm doing. So I like it. Now, do I think that this 2025 open is going to hold? Well, I'll be honest with you. I'm pleasantly surprised at the moment that this first retest today has held. That 2025 open, at least on this exchange, is going to vary with a few bucks from exchange to exchange. But here on Bitstamp, it was 93.3K, and our retest today went to 93.5 93.5K. So that held with no wick whatsoever. The wicks, I always kind of consider those a sign of weakness. So no wicking through it at the moment. But look what we have here. I'm going to clear this out now because see if we can eliminate some of the noise here on the chart. But look what we have here. Below this 2025 open, we have, I think, some very strong technical support here. And, if the week was ending today, I'd be like, oh, hallelujah, awesome week. We retested support and it helped. This obviously holding on to the 2025 open, super, super bullish if it can happen. But we've got a lot of daylight between now and now and the weekly close. Mark saying that's a lot of lines. Yes, it was a lot of lines. If you missed the beginning, I'll those were the weekly and the annual and quarterly opens and opens rather, and those are showing some significance for us. So as you can see, we have the green 21-day moving average. This actually is pretty close to where it sits on the weeklies as well. And then, so the green 21 has golden crossed after winding, after death crossing up here. We finally start to see some recovery with the golden cross through the red 50-day moving average, and then crossing above the purple 200 and the blue 100-day moving averages. But recently, like as much as as recently as a few days ago, we got a death cross between the blue 100-day moving average and the purple 200-day moving average. So we talked about this on Friday a bit, and I think that if the trajectory, if price can hold here, then we would have this would be a relatively shallow death cross between the 200 and the 100, as the 21 will drag things up if price continues to move upward. Now, if we have a breakdown here, then maybe this is a short-lived golden cross. So those are things we need to develop, and quite frankly, the outcome from Fed Chair Powell's speech on Wednesday might have some bearing on what the directional move is moving forward from, say Wednesday on. Excuse me. So I like this 21. One of the things I like most, and I'm going to take it to the weekly chart here. One of the things I like most is that the 21-week moving average and the 21-day, for that matter, they're both very, very closely correlated at the moment, believe it or not. But they're also closely correlated with this prior top or support level. This was a range that got RS flipped, and it became a support level after weeks and weeks of testing it. Right, it got tested numerous times before things finally broke down, and it broke down on the big tariff announcement. So reclaiming this was a big deal last week, and holding above this would be huge. If we are to break through the yearly open, then I think this is a very strong target here between, in this range of the 21-week moving average and this prior support level, which was around 91.6K. If that breaks down, then I think that, this becomes the next kind of backstop area, at least until the FOMC meeting and speech, or Fed Chair Powell's press conference, I should say, not a speech, but his press conference on Wednesday. So we'll be, nobody is expecting the Fed to cut rates at this point. I mean, 97.6% of those polled say no rate cut. And Fed Chair Powell has said with his comments in the past few weeks, there's so much uncertainty with this tariff program that it is difficult to forecast anything until we have something stable and set in stone. So that obviously hasn't happened yet. Sure, there are negotiations happening. I think the market at least understands that these negotiations, or this whole tariff approach was a negotiation or a negotiation tactic. So maybe there's some comfort in the fact that we're not going to have the massive tariffs that were initially proposed, and like we're also supposed to be grateful that it's a lesser number. Remains to be seen how things are settled, but the one thing that is for sure is there's no certainty in the market, and the market does not like the uncertainty or the instability. So there's that. That said, will we get a dovish or a hawkish Powell? He does such a great job of walking the line, but I don't see him committing to a whole lot. Now, as we go down the road in the in June, how does this dynamic change? This has been a moving target because last week there was a 60% chance of a rate cut forecasted by those polled here for June, and that doesn't look like it's in the cards now. It increases for July, but this is just kicking the can down the road, I think, for the this 90-day negotiation period we're in with tariffs at this point. So those are all things that we just have to watch and see how they develop from here. Mark is asking, what's more significant, Fed's press conference or Friday's jobless claims? Fed's press conference, because he's going to tell you exactly what he's thinking. Jobless claims, the unemployment rate last week was flat, which is a plus. The jobless claims were not great last week. Like, we didn't have great economic reports last week at all, I don't think. Let's see, where were we on Friday? I think we had some pretty significant misses on the reports last week. Let's see if I can get the month. Let's get this month. Jobless claims last week were hot, okay, but it didn't really do a whole lot. We had I guess we were still pumping at that point, and we peaked on Friday, right? But Friday morning's numbers came in. Non-farm payrolls were up. That was positive. Unemployment was flat. That was positive. So we had negative on Thursday and positive on Friday, and things, we are where we are at this point, right? So non-farm payrolls was a big miss. Unemployment, those were the biggest ones. And then we looked at kind of the nuance here of the average hourly and participation rate, et cetera. No big surprises there. I think the biggest surprise was that the unemployment rate stayed flat despite all of the cuts, the Doge cuts in the government, right? So in terms of what my thoughts are, and listen, Mark, I'm no economist, so there's probably some folks out there that are way better at answering this kind of stuff than I am. But my take on it is, just from what I've been watching and what I've been experiencing over the past several years of tracking this stuff, is that in this case, right, sometimes we don't know if good news equals bad news or bad news equals good news, or if good news actually equals good news. I think the market would like to see a strong economy at this point. It used to be we'd look for those unemployment spikes to go, okay, we're getting closer to a rate cut. Now, I don't think we get to a rate cut until we have some clarity on tariffs, so that the Fed can then kind of bake in what that might do to GDP, what that might do to overall growth, and how that might affect the jobs market. So one data point does not make a trend. So if we have, regardless of what the number is on Friday's report, we could, we're likely going to have some short-term volatility around it, but I don't think it is trend-defining volatility. I think what the Fed telegraphs will be more important for the macro trend, if that makes any sense. Hope that answered your question. And if anybody else has some different insight on that, by all means, please share. Back to the charts here, we can see, so this rejection, and for anybody that's joining late, we had this Timescape Levels Indicator up, and it showed us that we had resistance up at this 98K level, right? So let's try and make this easier to see. And that's exactly what happened, right? So we did get that rejection from there. And the fact that we're ranging here now at this 2025 open is really just a sign of bullish strength. But I have to wonder if this isn't a good old classic sucker punch in the making coming up here. Because I mean, let's be honest. What's a very crypto thing to do? The most crypto thing to do would be to would be to lure in some more shorts, and then lose this level, and then potentially recover right here, and then go back and squeeze the shorts on a retest of resistance at 98K. What I want to see happen is, I mean, listen, I'd be very, like I said, pleasantly surprised if this holds here at the 2025 open. But again, we're on Monday, and we got a lot of daylight between here and Sunday's weekly close. We have, as you can see, we have two trend precognition algos running on the chart here. Okay, one is the A2 plus algo, that's the arrows. The other one is the A1 algo, and that's the dots here at the bottom. The A2 plus did not give us any new signals on the weekly chart, but the A1 gave us a new signal on the weekly and on the daily. We have a down signal today, so you're like, okay, well, how come price is going up? Well, price went down first, and what this is telling us, it's not necessarily telling us that that the price is going to tank. It's just saying that price is not likely. What the indicator technically is telling us is that price is not likely to go higher than it did last week at that 98K. So we're not likely to take out that support, that resistance level at 98K this week. However, that obviously could change if we get some dovishness out of Powell on Wednesday, or if another catalyst comes in, or just quite frankly some manipulation shows up in the order book to do that. But at the moment, this is all well and good. Again, we got a lot of time between now and the weekly close, so this could erode here. Whether it happens before Wednesday's FOMC event or not remains to be seen. But I would be very, very cautious. If you're shorting in this environment, I would just say, and to be clear, I'm not, but I would just say I would be conservative with your profit taking, because chances are you could be setting yourself up for a whole lot of pain. Again, I think this zone kind of remains the backstop if things break down further. I happen to like where the 21 week sits here in the grand scheme of things around this 91.6 level, and we do have some history around there. So in terms of what we're seeing in the order book now, as you can see, we came off this support level down here at 93, but what makes me think, one of the things that makes me think that we could see more downside is that we don't have great support up here above, so that 2025 yearly open is right here at 93.5. There's very little holding that up. That's $5 million right there. Okay, so there's not a lot. Not only is there not a lot of bid liquidity holding this up right here, whales are not super active right now. Okay, we've seen mostly selling out of whales since we peaked up here around that 98 level, and brown has bought a little bit back in, but mostly down, and purple mostly distributed in this level over the weekend. Now, what happens on the weekend is not the trend either. In most cases, sometimes it is, but mostly it's just weekend whale games, and so I really didn't pay attention to the charts a whole lot this weekend. Of course, I stay in tune to price, but I wasn't really tracking things a whole lot this weekend because I felt like we were gonna hold in this range at least until we get to Wednesday's meeting. Now, one of the things I'll be watching for is how's the liquidity dynamics changing between now and then. Are we going to see more show up here above the 93 level or above the 90K level? Or are we going to see things building from this side? When we get, at the moment, there is room for volatility. Okay. There's clearly room for volatility. The liquidity dampens the volatility, and there's just not a ton of it here in the order book in this near range at the moment. So as we approach Wednesday's meeting, perhaps we see some guardrails show up, larger blocks of bids and asks showing up to keep price pinned and keep the volatility at bay. But I'll tell you what, right now, it looks like there's room. And one of the reasons I like that 21-week moving average level is because we do have a little bit of a ladder up from from 88 up to that 90.5K range, a little more up at 91, a little more at 92. So there's there's more developing bid liquidity here coming into play. I'd like to see it get stronger, but this is why I've got my focus on a target in this range here. I think that's about it. If you care about the the ETF narrative, sure, another big day on Friday, but it was only BlackRock who was buying, and they've had a pretty big run here in the past week or two. So, including one of their largest days ever of inflows. But this is not the smart money, in my opinion. The smart money, as a Bitcoin trader, an investor, the smart money is the people actually holding real Bitcoin, as opposed to the ETFs, which are essentially a synthetic, right? So, if things change between now and then, and we see anything significant changing in the order book, I will, of course, always do my best to keep you guys updated on that. But I think it's pretty simple, pretty straightforward here at this point. Again, my key levels that I'm watching is where this Timescape indicator shows us we have strong resistance and support. As you can see here on the weekly, we have strong resistance at this 98K level, which was the here we go, first week of 2025 open, and the strongest support is at the actual annual open here at 93, roughly. We'll say roughly 93.5. It's a little bit lower than that, but right around that range. So strongest support, strongest resistance at the moment. If that breaks down, we look into this range right here. We'll have to see how things develop. And again, if things change, I will do my best to keep you guys updated. Hope that helps you out, and hope you have a fantastic week. The name of the game here is not to lose money. Here's to trading smarter, my friends. If you want more info on any of the tools here, you'll find them in the description below. And if you haven't done so yet, smash some buttons and make sure you hit that subscribe so you never miss another stream. Have a good one, guys.